The amount in the debit side is your sales return and the amount in the credit side is purchase return. So you have to minus from purchase as well as sales. If the amount is in the debit side, it is interest paid. If the amount is in the credit side, interest received. So we'll record in the P&L account. Outstanding salary, you have to add to the salary that is in your P&L account. Next in the balance sheet, outstanding salary is a liability. So you have to record in the balance sheet. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the second session of your 9th chapter of your first PUC syllabus, that is from Part B, Financial Statements 2. So this chapter is all related to your financial statement where you have to prepare your trading, profit and loss account and balance sheet along with the adjustments. So already we have discussed in the first session. So let us quickly recall what we have discussed there. So in our first session, I have covered this topic. So we had learned about the introduction about this chapter. Next, after that, we have learned about objectives and need of adjustments. So what is the need of including all the adjustment while preparing your financial statement? So in order to get the accurate financial position, true and fair financial position of the business can be ascertained only when if you take into consideration all the adjustments relating to certain expenses as well as income. I have told you a very important chapter for 12 marks. So we had solved a problem on 12 marks. Okay, so where we had learned how to prepare your trading account, profit and loss account and balance sheet. In today's session also, we shall continue with one more problem on 12 marks. So go through the problem here and this is a question paper problem. Okay, so this is how the questions will be asked for 12 marks. Very easy if you understand the concept. So from the following trial balance, prepare trading and profit and loss account for the year ending 31st/3/2017 and balance sheet as on that day. So we have to prepare our trading, profit and loss account and balance sheet on 31st/3/2017 and they have given us trial balance. So if you see your trial balance here, they have given us trial balance along with adjustments they have given. So by going through the question itself, let us see where each and every account has to be recorded, either in trading account or in profit and loss account or in the balance sheet. Now capital, where do we record? In the balance sheet, that is in the liability side. Drawings in the balance sheet, liability side once again. Next, purchases and sales, we will record in the trading account. So this is purchases amount and this is sales amount. Next, we have stock, that is your opening stock. So we'll record in your trading account. Next, returns. It's nothing but your purchase return and sales return. So the amount in the debit side is your sales return and the amount in the credit side is purchase return. So you have to minus from purchase as well as sales. So returns, it comes under your trading account. Wages, it comes under your trading account because it is a direct expense. Next, building. So it is an asset. So it comes under balance sheet. Next, freight charges. So freight charges we will record in your trading account. It is a direct expense. Trade expenses. So trade expenses is also a trading or it is a direct expense. Here as a word itself tells us trade expenses. So we'll record in your trading account. Advertisement. So we'll record in your profit and loss account. Next, interest. So interest, they have given the amount in the credit side, which means that it is interest received. Okay, so if they give or not, it is understood by seeing the amount. If the amount is in the debit side, it is interest paid. If the amount is in the credit side, interest received. So we'll record in the P&L account. Next, taxes and insurance, P&L account. Next, debtors and creditors in the balance sheet. So this is the amount of debtors and this is the amount of creditors. Next, bills receivable and bills payable. So this is bills receivable and this is bills payable in the amount in the credit side. Next, so this comes under balance sheet, capital items, cash at bank in the balance sheet. Next, cash in hand in the balance sheet. Next, they have given us total. Now let us see the adjustments where we have to record the adjustment. All these accounts in the trial balance should come once. Whereas in the adjustment, so these adjustment has to come twice. Okay, so see the adjustment here. Closing stock was valued at rupees 20,000. It comes under trading account and in the balance sheet asset side. Next, insurance prepaid. So insurance prepaid, so you have to minus. So minus from the insurance, that is in your P&L account. Next in the balance sheet, prepaid expenses. So prepaid expenses is an asset, you have to record in the asset side of your balance sheet. Outstanding salary, you have to add to the salary that is in your P&L account. Next in the balance sheet, outstanding salary is a liability, so you have to record in the balance sheet. Depreciate building by 5%, so you have to record in your P&L account debit side, and in the balance sheet, you have to deduct from the respective building. Next, provide PDD at 5% on debtors. So once it has to be recorded in your P&L account, that is in the debit side, and from the balance sheet, that is from debtors, you have to minus PDD. So hope you are clear about it. So these are the adjustments. So we shall directly solve the problem. So we'll write the heading trading and profit and loss account for the year ending 31st/3/2017. So you'll be having debit as well as credit side. Under debit side it is expenses or losses amount, and in the credit side revenue or gain or income or gain amount. Okay, so we shall start with the trading account now. So you will start with 2 opening stock. 2 opening stock, and the amount is, so opening stock amount is 2,400. Next we have 2 purchases. And again we have returns also, so less returns. So 2 purchases less returns. So purchases amount is 17,800 minus returns, that is 900. 17,800 and here it is 900. So we shall count it later. So or else we shall do it now itself. 17,800 minus 900. So we'll get 16,900. Next, 2 direct expenses. So let us see what are the direct expenses they have given. So if you see the direct expenses, yes, we have wages 1,600. So let us see anything relating to wages. So there is no adjustment on wages. So wages amount is 1,600. 2 wages 1,600. Next what we have, yes, we have 2 freight charges 4,000 and trade expenses 400. 2 freight charges 4,000 and 2 trade expenses 400. Okay, next one. After trade expenses, advertisement comes under P&L account. So all these comes under P&L account. Now coming to your adjustments, yes, we have closing stock. So we will record buy sales less returns. So you have to record in the credit side buy sales and minus returns. And again we have closing stock also. So buy closing stock. So sales amount is, yeah, we have sales amount 30,000 minus 560. 30,000 minus 560. So let's see how much it is. 30,000 minus 560. So I'll get 29,440. Again closing stock. Closing stock is in the adjustment. Closing stock is 20,000. Closing stock 20,000. Okay, so closing stock we got 20,000. No other direct expenses, so you will balance both the side. So here it is 29,440 plus 20,000. So it is 49,440. 49,440 minus 2,400 minus 16,000. So 49,440 minus 2,400 minus 16,900 minus 1,600 minus 4,400. So I'll get 24,140. So total both the side is 49,440. 24,140. So this is a balancing figure. So to gross profit to gross profit carried down, and this is a balancing figure. So this is your trading account. Now moving on to the continuation will be your profit and loss account. So we'll bring down the gross profit. So by gross profit brought down, and the gross profit is 24,140. Now we will record all the indirect expenses. So we have salaries. So we shall start with 2 salaries. So let us see the amount there. So salaries, P&L account. So we have advertisement. We shall record it later. Whether we have salaries. Yeah, we have salaries. So salaries 1,600. If you see the adjustment, we have outstanding salary 400. So salary 1,600, add outstanding salary 400. So it will be 2,000. Okay. So salaries is done. Next is, so after salary we shall continue with advertisement 480. So to advertisement 480. Next to advertisement 480. After that we have interest received. It comes in the credit side 1,300. So by interest received, 1,300. Next after that we have taxes and insurance 860. So it is in the debit side. To taxes and insurance. Then we have debtors and creditors in the balance sheet. So everything is done. So once again we shall check interest received, we are done. Advertisement finish. Next nothing in the adjustments. Okay, so salaries P&L account, that is done. So 1,600 add outstanding. Now we shall see the adjustment whether we have recorded at least once. Closing stock we are done in the trading account. Insurance prepaid to the extent of 200. So 860 minus prepaid insurance. So how much? Prepaid insurance is 200. So 200. So it will be 660. Okay, next is outstanding salary is done. Depreciate building by 5%. So you have to take the depreciation. So to depreciation on building. And the amount of building is So building value is 44,000. 44,000 into depreciation 5%. So 44,000 into 5 divided by 100. So 44,000 into 5%. So it is 2,000. So you can write directly here 2,200. After that, the next adjustment, provide PDD at 5% on debtors. So I have to take here 2 PDD on debtors. So let's see what is the value of debtors. Debtors value is 13,000 into 5%. 13,000 into 5%. So that is 650. So we are done with the adjustments also. Now we shall balance. So balance both the side. So 24,140 plus 1,300. 24,140 plus 1,300. It is 25,440. 25,440 both the side minus 2,000 minus 480 minus 660 minus 2,200 minus 650. So we'll get 19,450. 19,450. This is a balancing figure. So this is to net profit carried down, and this is a balancing figure. So 19,450 is the net profit because your credit side is more than debit side. So it is net profit. Now we shall start with your balance sheet. So balance sheet as at 31st/3/2017. Now we shall go through the items here, that is capital, drawings, and we have net profit. We'll record in the liability side. So how to record in the liability side? So I'll leave some space here. So capital, so let's see, add net profit and minus drawings. So let's see the capital. So capital 60,000, drawings is 3,520. So 60,000 and 3,520. 60,000 and drawings is 3,520. Let's see the net profit, 19,450. 19,450. So 60,000 plus 19,450. So it will be 79,450 minus 3,520. So you'll get 75,930. Okay, so this is how you will treat the capital. Capital, add net profit minus drawings. So again we shall recheck here. 60,000 plus 19,450. So we'll get 79,450 minus 3,520. So we'll get 75,930. Yes, this is correct. Now we shall go through the next account. So purchases and sales is our trading account. So we'll start with the building. Building 44,000. Let us see whether we have any other current assets. So current assets, yeah, we have debtors and creditors. We shall record that first, then we shall come here. Debtors 13,000 and creditors is 2,400. So creditors 2,400 and debtors amount, and we have PDD also. So minus PDD. In the adjustment we have PDD where you have recorded here, that is 650. So 13,000 minus 650. So 13,000 minus 650. So we'll get 12,350. So debtors is done, creditors done. Bills receivable and bills payable. Bills receivable is an asset, bills payable is liability. 3,000 and 1,400. So this is 3,000 and here 1,400. So this is bills receivable and 1,400 is bills payable. Okay. Next is bills receivable and bills payable done. Cash at bank 2,400, cash in hand 380. So these both are asset, cash in hand and cash at bank. So cash in hand 2,400 and 380. So 2,400 and here 380. So we are done with this. We are left out with a building because it is a non-current asset. We shall record it later. So non-current asset building 44,000. Building 44,000 because we have depreciation. Depreciation how much? Depreciation on building 2,200. So minus depreciation 2,200. So 44,000 minus 44,000 minus 2,200. So I'll get 41,800. So we are done with the trial balance. Once again we shall recheck. So capital drawings done, buildings done, and next is we have bills receivable, bills payable, debtors and creditors, cash and bank, cash in hand done. Now we shall continue with the adjustment. Closing stock. So I have to take in the asset side. Closing stock 20,000. Closing stock 20,000. Next, insurance prepaid. So prepaid income is liability. Outstanding income and prepaid expenses is asset. So insurance prepaid is 200. So I have to take in the asset side. Insurance prepaid, that is 200. Next, outstanding salary 400. It's a liability. So outstanding salary and the amount is, outstanding salary is 400. Then we have depreciation is done, provide PDD at 5% on debtor. So that also we have taken in the balance sheet. So minus PDD. Now we shall balance both the side. So let's see what is so we'll get 80,130. If you see the liability side also it is same. So 2,400 plus 1,400 plus 400 plus 75,930. So it is 80,130. So your both assets and liabilities are same, which means that our answer is correct here. So this is how you are going to prepare your balance sheet. So hope you are clear about it. So you have to add all the assets and add all the liabilities so that your both the side of assets and liabilities will be equal. So in my next session, we shall solve one more problem on the same, that is 12 marks problem, where you have to prepare your trading account, profit and loss account and balance sheet. So my dear students, hope you have understood today's problem. See you all in my next session with a new problem. Till then, take care. Thank you.